Okay, in this video, we're going to be talking about the best Fidelity index funds for your account, specifically for your retirement, IRA, and 401k accounts. So why do I like Fidelity? One of the reasons I like Fidelity, I've been using Fidelity for almost 14 years now. And last year, they recently launched a zero fee, zero expense ratio index fund. So what do I mean by that? Well, simply, if you take a look at these, they're absolutely free. So they have no minimums and there are no account fees and the expense ratio is zero. So there's actually 4 of them, but I'm going to be talking about the best 5 because I don't recommend all of these free ones. I'm going to give you guys my recommendations later in this video. So I just wanted to just show you quickly why I like Fidelity funds so much. I think they're a great value. I think it's very easy to set it, forget it. They're not only great for retirement accounts, they're great for individual accounts, traditional IRAs, custodial accounts, basically any different type where you want to invest in the market but you don't want to have to worry about buying individual stocks and you don't want to pay the same mutual fund fees. So let's quickly go into the article. I wrote this article, posted it on the site. You can check the link out in the description box, the best Fidelity index funds. So like I said, I talked a bit about this earlier, why I like Fidelity funds so much. I own these funds in my SEP IRA, and I'm currently in my SEP IRA. I have a mix of stocks and index funds, but let's just quickly go into the best ones. So actually, Fidelity has over 20 different index funds they offer, so I'm going to quickly show you guys that really quickly. Okay, so as I was saying here, so here are all of the zero minimum index funds that Fidelity offers. There's over 20 of them, a lot of different ones. So we've got stock ones, we've got international funds, emerging market funds, real estate bonds, treasuries, and these are much cheaper than the Vanguard alternative. So let's just go right back into it and let's get started. So starting, I don't want to show all of them right away, but here we go. Okay, so I'll just show you guys the best ones just in case you were too long this video and you just want the information very fast. So here are my top 5 best Fidelity funds. We have the Fidelity Zero Total Stock Market Index Fund, that's ticker symbol FZROX. We have the Fidelity Large Cap Index Fund, that's FNILX. The Fidelity International Index Fund, FZILX. Fidelity Long-Term Treasury Bond Index Fund, FNBGX, and finally the Fidelity Real Estate Index Fund, FSRNX. So as you go see here, guys, I made a quick chart of the net assets. Currently, the largest fund is the Zero Total Stock Market Fund, and the expense ratios on 3 of these are absolutely free, and then on the last 2, it's very small, much smaller than most other funds like Vanguard or any mutual funds. So let's get into it right now. So my favorite overall index fund for Fidelity is the Fidelity Zero Total Stock Market Fund, that's ticker symbol FZROX. I love this fund because it basically invests in the entire US stock market, and here are some of the current holdings. So I'm going to show you guys a little bit more information on it. Let's just go over to back to Fidelity site and let's just take a look at it. So one of the reasons why I like this fund so much is simply because it's pretty much set it and forget it. It basically encompasses the majority of the US stock market. So if you guys don't want to pick individual stocks, this is also a great option for retirement and custodial accounts. If you wanted to set up obviously your retirement account, maybe you don't want to invest too much money in stocks because you're worried about the long-term, the short-term and long-term risk of holding stocks, and you just want the money to grow. So let's take a look. Wait, that's the wrong fund. Let's see here. So let's just take a look at FZROX. Here we go. Okay, so FZROX. So this is the biggest Fidelity no fee zero index fund that they offer. As I can remember, guys, the current net assets is around 51 billion. So this is pretty much the biggest one they offer. Let's take a quick look at some of the stats here. So since the fund, so I believe the fund started, let's see when it's, okay, 2018. So actually a little over a year ago. The life of the fund is around 10% return. Over the last year, it's returned around 20%. And so far this year, a phenomenal 4.59%. Expense ratio, as I mentioned earlier, is 0. The net assets is around 5 billion. So let's take a look at some of the largest holdings. 19% of the portfolio is Apple, Microsoft, Amazon, Facebook, JP Morgan, Berkshire Hathaway, Alphabet, Johnson & Johnson, and Visa. So like I said earlier, it's just investing in like the total US stock market. So this is an excellent fund. This is the fund that I recommend for most retirement accounts. If you guys want exposure to the US stock market, this is the one you're going to be interested in, and best of all, it's free. I also have this fund for my son's custodial account as well, and I'm going to be adding money to that one over the years. So this is a great option for retirement custodial accounts, any type of Fidelity account you have. If you want index funds, this is the main fund you should be interested in. That's the number one. Okay, so now continue on the list. We have number 2. So the Fidelity Zero Large Cap Index Fund, FNILX. This is very similar to the one I just mentioned earlier, FZROX. The only difference is that this is basically weighted mostly in large cap stocks. So you're not going to have any mid cap or small cap stocks. The large cap stocks are typically companies over $5 billion or more in market cap. So this is kind of great if you're closer to retirement. I would say if you're over the age 40 or 50 and you're getting closer towards retirement, if that's your goal, retirement in the 60s. Of course, if you're looking to retire earlier, guys, be sure to check out the link in the description I have if you're interested in retiring earlier at 40 or something like that. Because I don't think you need to retire at 65 if you don't want to. It's possible to retire earlier, but I'll get into that in a later video. So basically what this fund is going to be weighted mostly in the strongest companies. So only large cap holdings. So let's just go to that chart right now. Very similar to the FZRX Total Stock Market Fund. So let's go to here. So this one, of course, no expense ratios and no minimums to invest, but it's heavily more weighted in much bigger companies. Remember, in FZROX, the top 10 holdings was weighted for about, I believe it was about 19%, something like this. As you can see, this fund has actually performed slightly a bit better. They started around the same time, and this more weighted. So as you can see, 22% of the holdings. So just heavily weighted in large cap stocks over $5 billion or more. And this is basically a very much more conservative approach than the previous fund if you don't want to own small cap and mid cap stocks. This fund has done exceptional 10% annual since it was started, and did 22% last year and already 5% this year. So this is another excellent choice. Best of all, no expense ratios. Okay, so number 3, Fidelity Zero International Index Fund. So this one's a little bit more tricky because of all of the chaos going on in Asia. We've got the U.S.-China trade talks. We've got, as of recording this video, there's a coronavirus outbreak which could hurt production in China if they're closing down factories. If people aren't really leaving the house much and producing much, that's going to hurt earnings. So these stocks are mostly weighted into Asian stocks. So some of the top 10 holdings are Nestle, Alibaba, Tencent, Samsung, HSBC, Taiwan Semiconductor, and Toyota. As you can see, the majority of these companies are Asian companies. So let's just quickly take a look at this fund. So like I said, guys, this is probably a fund that I would like in the future, but right now I don't think it's smart. I just think with the gains in the U.S. stock market right now, I just think it's kind of a much better approach, just kind of ride the trends. A lot of people are talking about corrections and things like that, but we definitely want to be careful with Asian stocks in general because there is definitely going to be some long-term issues if this coronavirus thing keeps going on. So as you can see, because of kind of the things going on, the year-to-date performance is basically flat, and the life of the fund is 2%. So this one's a little bit more risky, as you can see, because the majority of the companies are Asian-based companies, but I like this fund long-term. So right now, I would say hold off on this fund, but once we hear some more, once basically we get some more clarification for the China-U.S. trade talks, and generally just this coronavirus, this is really stifling. I mean, they're shutting off flights, they're shutting off a lot of travel activity, and that's really going to hurt import exports. So, you guys, this is another fund I do like, but I think this is kind of a long-term thing. So I wouldn't get into this one now. I would just focus on the U.S. stocks. The ticker symbol is FZILX. Okay, so number 4. So now let's get into something a bit more conservative. Let's say you're over 50. Let's say you're in either nearing retirement age or you're already retired, but you still want to invest in index funds. Well, I got a great fund for you. It's called the Fidelity Long-Term Treasury Bond Index Fund. And the reason why I like Treasury bonds is because it's very conservative. You know, they're just investing in U.S. Treasuries. There's no, you're not worried about earnings and all of these things like that, and you don't have to worry about a stock market crash. But the returns for this fund are actually pretty solid, actually, with a lot less risk. So the one thing about this fund is it does charge an expense ratio, so it is not a free fund, but the expense ratio is very small. It's only 0.03%, so you know, not a lot of money there. And I show you guys this fund here. So if you guys come down here, you go to this page, link to this page in the description box. It's right here. You take a look at this fund. So this is a really nice fund. Like I said, you're already retired, you're nearing retirement age, you don't want to worry about the stocks crashing, you're not interested in investing in emerging markets, you're not interested in owning US stocks, Asian stocks. None of these things interest you at the moment. You can do really well with this fund. So as you can see here, over the last 10 years, the fund has returned around 7%, not too shabby. And over the last year, it's actually outperformed the US, the FZROX, which is the total stock market fund. And year to date, it's actually outperformed both of the funds I mentioned earlier. So why is that? Well, obviously, with the stock markets at an all-time high, a lot of people are parking their money in Treasury bonds. You know, for its safety. You know, you're guaranteed a return, you're guaranteed interest, and there's really not risk. The only risk is that the entire U.S. government collapses, something like that, goes bankrupt. So risk is there is much less than some of these stocks going. Really nice fund and a nice way to balance out your portfolio. Remember, if you're nearing retirement, you want to weight more towards bonds. So usually the traditional number is you take your age, you subtract it from 100. So if you're 30 years old and you want to be conservative, you'd be 70% stocks, 30% bonds. If you're 60 years old, then you would subtract 60 from 100. So you'd be 40% stocks, 60% bonds. But if you're over 65, I don't see the point in risking much money at all in the stock market. You should probably be 90% in bonds. You can still earn around 7% with very little risk. I don't see the reason to risk your retirement funds. So this is a great choice. And then finally, I want to talk last about the Fidelity Real Estate Index Fund. This is another one I really like, even though real estate REITs, real estate investment trusts have been beaten down because tech stocks have been just soaring over the last couple of years. So the Real Estate Index Fund is you know, it's basically a mix of real estate and investment trusts. So even though it's underperformed the market in general, I believe that land becomes more valuable over time, and I always believe in having around 10% of my portfolio invested in real estate investment trusts. So let's just take a quick look at that one. That one's a really nice one. It hasn't done nearly as well as the U.S. stock market or the U.S. long-term Treasury funds, but I'm a really big proponent of real estate. It's something that I wasn't so interested in when I was much younger, but now that I'm into my 30s, I realize that, you know, they're not making any more land, and even though in the short term the real estate investment trusts have not been performing very well, we should continue to see property values rise in the long term. Rents will go up. If you guys live in any major city, you know how expensive rents have gotten over the past 5 to 10 years. So they're smart to get some of the investment into that sector. So as we take a look here, we can see that the life of this fund, Real Estate Index, is around 9%, pretty solid. Fund's been around almost 10 years, up 3% year to date, and a 10% over the last year. So very solid. Here are some of the holdings. 43% of the holdings are in Prologis, Simon Property Group, which is actually one that I really like, Well Tower, Public Storage, Avalon Bay, Equity Residential REIT, Digital Reality Trust, Ventas, Essex Property, and Boston Properties. So these are all very well established, solid REITs, very strong companies all there. There aren't any low quality companies in that mix. And this is a way to invest in real estate. So as you can see here, hypothetical growth of $10,000 ever since 2013, over 7 years, you would have, as you can see here, over the last 10 years, you would have doubled your money. So pretty nice consistent gains. Not going to see the same returns that you're going to see with stocks in general, because stocks are much more aggressive, but I like real estate. With this fund and with Fundrise, that's probably going to comprise the majority of my REITs until I get interested in physical real estate, stuff like that. But right now, since I'm traveling, doing some other things, this is the fund I'm interested in. The ticker symbol is SRNX. So that's it, guys. Those are my top 5 Fidelity index funds that I recommend. Be sure to check those links in the description, guys. Remember, a majority of these funds are absolutely free with no minimums. So even if you're just putting $5, $10 into these funds, no big deal. The most important thing is just to get started, and you can obviously grow this over time like a weed. Remember, even the biggest tree in the forest started out as a tiny nut. So that's it for now, guys. Give me a thumbs up if you enjoyed this video, and be sure to smash that subscribe button for more videos in the future. And that's it for now. Take care.